Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis video for the weekend of July 29th and July 30th, 2017. Let's take a look at markets here, and I'm recording this with about 3.5 hours before the close of Friday's session. This is how the markets are trading. So some of the stocks I am following. So let's take a look at those charts. We can see, as far as the Nasdaq is concerned, even after what was a volatile Thursday, which was yesterday, we can still see that the market is still off only 0.21%. So the Nasdaq has recovered most of those gains for the week, for Thursday's drop. And you can also see that pretty much what was going on here, in my estimation, the market was coming back to test the recent weekly breakout. And as of right now, it is holding. So you can take a look at the lows for the week and see that the market did not even get close to breaking below the weekly breakout of 6305.80, which goes back to this weekly closing high. So right now we are seeing good support, and as long as that weekly breakout continues to be intact, this market continues to be healthy. And of course, we know that if we crack below this number, that's going to be a failed weekly breakout if and when it happens, and that will be a reason to start looking for more downside potential. Now we can see, as far as the Nasdaq is concerned, right now we are still continuing to show the possibility of the formation of negative divergence. We have an improvement week to week, but we are starting to see evidence that the market is losing some of its momentum. The RSI has not made a higher high. We've been rejected right now when trying to hold above 69.1. It's not a good sign. And so the more we drift off this level and drift lower, the more there's potential for a correction, or at least a pullback. Now keep in mind, even with a pullback, the market still has the possibility and the opportunity to hold on this RSI support line. This line was good enough to stop the recent slide. So going back to the line lows here, this held the market together during the lows right there. So even if the market was to pull back, the first order of business would be to see whether it cracks below this line or whether it's going to bounce back above that line. And of course, as of right now, we don't know. Let's take a look at the Nasdaq daily. And on the daily, we can see that this test of the recent daily breakout was what was happening during the drop over the last 1 or 2 days. And we can see that the level was being tested, and right now is still holding. We'll see how we close and how we trade in the coming days, but this level, which goes back to this weekly closing high, was being tested, and over the last 2 days this level has held. That's a good sign of a market that wants to bounce. So let's just keep that in mind, that the market has come back to test that recent breakout. It is holding, and as long as it is holding above this price, the market continues to be healthy. In other words, this is just a healthy pullback in an otherwise strong market. Now of course, we continue watching that level because this is a fluid situation. If this market was to go on and crack below that level, that's evidence of a market that wants to probe lower prices. Now, one of the reasons why we've seen a shallow pullback over the last 1 or 2 days is because the Nasdaq was rejected when it tried to move above the 69.1 threshold. So which might explain why it stalled right there. Keep in mind, this also happens to be where we had drawn a line showing possibility of resistance by connecting the RSI highs. So once those highs were reached, the market tagged that level or the line, and we are seeing a pullback. So visually, it seems like the market has lost some of its recent strength, and we'll see how much more it might have to the downside. Watch those weekly breakout levels and the daily breakout levels for short-term idea as to whether the market is healthy or if the market is looking for lower prices. Now, if we take a look at the current hourly chart for the Nasdaq, and I'm using RSI setting of 26. I'll show you 3 lines that indicate that this market is due for a bounce. So 3 lines, as long as those lines are holding. Line number 1 is this line here, which gave us, on hindsight, or even during this action in the live trading, once it cracked above that line, you can see this gap up. Market has responded by trading to all-time highs. We take that line and we extend it like that. And what you see here is absolutely good support. We've hit this line twice and the market has held, suggesting that what we are seeing here is a recovery of the Nasdaq off the lows, is consistent with support on this blue line. So that's the first line. The second line is a simple line connecting RSI lows, and it's this line right here. And again, we see that the market has come back to test that line. As of right now, we bounced on that line twice. That's good support, nice double bottom action. So those are the 2 lines. Let me show you one other line, and that line goes to this recent breakout. So we figure out where the movement began is somewhere here, where the market cleared above that line and has been moving higher. We take that information and draw our straight line, and again we see that the market is bouncing on that line with a double bottom support. So on the hourly for the Nasdaq, we see evidence that this market wants to recover after a 2-day pullback. And at the same time, we know that if those 3 lines were to be broken to the downside, so let me bring back those 3 lines. So the previous, this line here, and the RSI lows line, if the market was to break below those 3 lines, then that would be visual evidence for potential for lower prices. Now, don't forget that the construct here, or the backdrop of the current market, is that we are finding support on the hourly. We should give this a lot of weight short term. Why? Because the Nasdaq continues to trade with its RSI above 69.1. We know that as long as the RSI is above 69.1, we are looking at a market that is still sideways at worst and bullish at best. And one more time, I'm sure some of you are tired of hearing this, but this is what happens when a market is trading above 69.1, as we did here from 2013 to this level here. Took about 2 years. Yes, we had pullbacks, but those pullbacks were shallow and short-lived for the most part. And we can see that here for 2017, market's been holding that type of a situation where RSI remains above 69.1. As long as that's the case, the market should continue to be sideways to outright bullish. If we take a look at the Dow, we can see that the Dow had a breakout many weeks ago. That breakout continues to be intact. It's a successful breakout. The market cleared that level and hasn't looked back. Don't forget that for the Dow, we continue trading above 69.1 over the last couple of months on the weekly chart, which might explain this grind to the upside. As long as the RSI is holding above 69.1, this Dow should continue to be sideways, if not outright bullish. Now, just like we saw with the Nasdaq, the Dow is coming to a level of potential resistance. It's potential resistance, given that there is a topside RSI resistance line that is potentially going to be a problem. If the market does not clear that line, we can anticipate around current levels there is a possibility of a pullback based on the topside resistance possibility from the RSI on the daily for the Dow. And I would like to take a second here and just discuss this idea that I talk about. Here we have uniform activity below 50, back above it. What that generally means is there's a good possibility that you're going to go back to new highs, test the highs, if not break through the highs. Here we can see that the market would go on to make new highs. We can see here again double bottom support around the RSI 50 held, which is this entry, and the market would go on to record higher highs and test those highs. We can even use this as support above the RSI 50, and of course we see that that has led to a fresh daily breakout for the Dow. Just some side observation. The level we can also watch for the Dow is this recent daily closing high, and the market did break out above that level. So let me share with you, the level is 21637.74. So we are above that level, which suggests that the market should continue to be okay as long as the Dow is successfully holding above that level. At some point, should we crack below that level, that would be a sign of a market that is due for a pullback. If we take a look at the Dow hourly, we can see potential for resistance. Unlike the Nasdaq, the Dow is sitting at potential resistance levels on its hourly chart. So this is also evidence of an improvement in price, but the RSI is declining. So that is a problem. If you take a look at the 30-minute chart for the Dow, we can also see that this is where we are finding some resistance. So the Dow is at resistance levels, the Nasdaq is at support. So if the Dow is unable to hold above this topside line, chances are around here we can expect some type of a pullback based on that resistance. And because of the strength of the monthly chart, if the market was to clear that line, expect an expansion of momentum to the upside. And that monthly chart, just a quick note here, continues to be very strong. As you can see, the Dow has been holding above 69.1 since about late 2016, been holding above that threshold number. Take a look at the description of the video for a link that describes where I get this number. But the Dow has been holding about this on a monthly chart. That's why we are getting this sideways at worst, bullish at best type of a situation. As long as the S&P 500 continues to hold above the prior weekly closing high, in other words, as long as the weekly breakout for the S&P 500 is still successful, we can assume that the market continues to be healthy. The level here that we were watching for a breakout, and the S&P has been above that level for 3 straight weeks, was 2439.07. So as long as it is above that level, S&P 500 continues to be healthy. Also, as long as the SPX is holding above 69.1 on its weekly chart, this market is still sideways at worst, bullish at best. Take a look at the S&P 500 daily, and here we can see the daily chart did respect the line we were drawing for potential resistance. In fact, we hit this line twice, which might explain why there's a shallow pullback as of right now. This might eventually lead to a bigger correction, we shall see. But this line was rejection, markets responding to it, and also S&P 500 is back below its breakout line. So the daily breakout for the SPX has failed, and as long as that's the case, then we start looking for the possibility of lower prices, maybe a shallow pullback. Because remember, on the S&P 500, I'll show you that the RSI is still above 69.1, which means that markets are sideways to bullish. That's pretty much what it means. So this could actually be a shallow pullback, a major pullback. We shall see. It depends on how the monthly charts and the weekly charts respond. So the level we're watching here for a daily breakout, let me give you that number in case it captures it again. But the level we're watching there was 2473.83. As you can see, we are back below that number. That is a market that is showing short-term breakout failure. But don't get too excited if you're trying to find reasons to be bearish, because the previous breakout is still good. And that previous breakout goes back to 2453.46, which is this daily closing high right there. So that breakout is still good unless we come back and break that. If we break that, then this market is due for a major correction. Now, don't forget that on the daily for the S&P 500, there is a line connecting the RSI lows. Most recently, we tagged this line here, the beginning of July, during these lows, and the market held. So we would have to break this line, really break this line, if there's going to be a serious downturn in the market. This line has to be broken first and foremost. And as you can tell, we are ways away from breaking that line. So, you know, the bears have a lot of work to do before they can actually break this market's momentum. Take a look at the S&P 500 hourly. And as long as this hourly line is holding, we've touched this line twice like we saw with the Nasdaq, then the S&P 500 is still healthy. There's also another line, just like we saw with the Nasdaq, top side line. We're just going to extend it. And you can see that the market has also bounced back above that line with a double bottom action. As long as that's the case, one can look for a market that is already stabilizing after a shallow pullback. So we are still looking at a sideways to up market, and if the market was to change its mind and break below these two lines here, then that is when we can start anticipating lower prices. We haven't seen that happen yet, so the bulls are still firmly in control. And again, in my opinion, the reason why the market continues to be strong is the same reason I've given you for pretty much the last couple of months and weeks. It's as long as the RSI is above 69.1, it's a strong market. Yes, you get shallow pullback, some stocks will fall, but generally the market is sideways to bullish. Now we see the S&P 500 showing this example here during this period where you got pullbacks, but ultimately the trend was to the upside. So I'd like to conclude the video here by taking a look at the 5-minute chart just to see what's going on. And here we can see that there was a line that stalled the market at the highs of Thursday's highs, intraday highs. Is a line connecting the top lines. So you can see we made an improvement to new highs at the expense of the technicals. We also hit that line a couple times, which was visual evidence that we were due for some type of a move lower short term. So that move was predictable on the 5-minute chart. At the highs, you can see here that the market tagged that level, which is this highs there. And now intraday we are still showing resistance on that line. So 5-minute to 5-minute, the market has some work to do. If it is to see higher prices, it would need to take out that line before it can continue higher. So what's the conclusion? Well, the conclusion is the market, yes, could see pullbacks, but if a pullback is going to be serious, we need to see major breaks. Otherwise, right now, given the strength of the monthly charts and some of the weekly charts, the market is still sideways to bullish. Now, subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we are going to cover stock picks, ETFs of interest, take a look at commodities like gold, take a look at other areas of the market like crude oil, and other areas that could have some opportunities. Eric Muathe, Muathe.com. As always, good luck, enjoy your weekend, peace and blessings. I am